For the past week, Bitcoin has been trading sideways in a tight range. So in this video, I'm going to be outlining the levels to be looking for to the upside and the levels to be looking for the downside, and my trade expectations, the setups I'm looking at to take in the future, what I'm currently doing now with my portfolio, and what the overall market metrics are saying to me. Okay? So without further ado, you're watching the Isaac Finance Show, and we're going to get straight into it. So if we jump straight to the chart here, so this is the Bitcoin index chart. It's a conglomerate chart. It looks at all the volume from all the different exchanges, essentially. So you get a well-rounded idea of what's happening with the Bitcoin price action. Okay, so the first thing that's first is I like to document the main levels to be looking for. So these are your monthly, weekly, and daily levels. I've already pre-marked them out, so you can see that right over here. Let's zoom in on the daily. Here's what we can see. So what we had before, we hit this level, just so I can recap of what happened in the past week or so. We had a daily level here at this high. So the reason this daily here was significant is because right above it was a liquidity region, okay? The liquidity region is this level here, just above the highs. The reason that's a liquidity region is because people who are in short trades tend to put their stop losses above local highs. The reason being, that's what retail's taught on the main theory that gets spread online, spread throughout the trading space for retail consumers or retail participants, sorry. So that level got taken out. We had a swing failure pattern failed auction and rejected that level. I was speaking about this level. This level is a level of significance. So if you look over here, you can see the golden zone Fibonacci, which the golden zone Fibonacci is just the 618. This is a number that occurs throughout nature in various different shapes or forms. You can do your research on what the number represents, why it is the way it is. People think it's silly, but it has a very, very good track history. I think it has to do with psychology of the market and where things tend to pivot. In terms of why that happens, I might do a video on why the Fibonacci region is very important, because I think that's actually quite interesting. So anyway, we had a bunch of confluences as to why we reversed here. Number two was also the volume from the region. Volume is very straightforward. Volume POC, red line here, you can extrapolate that out and it goes about, so if you can see here, just over there, that's why we're facing resistance where we're facing it right now. So what I was saying is what I'm looking for, upside, downside, and where we can take trades from right now, okay? Just to let you know, my positioning in the market is long in terms of my swing trade. I've been long from about this region here, about 111 to be exact. And I'll give you a really good person to follow in the end of this video who is a confluence with signals and trading, okay? That helps you use your own analysis and confirm that. So what we're looking at right now is we're teetering on the monthly region. So what we want to be seeing is we want to be seeing ultimately resumption to the upside. Now I'd say that's my base case situation. Now, I do think there's very much potential we take out these lows here. So we take out these lows before the resumption to the upside after hitting our 18K region. Now, my base case is up in terms of the medium-term landscape, and also my high-term time frame expectation is up. Locally, I would say that we might have potential for a downside, but in terms of swing trades, which is only what I'm going to be doing here, I'm not going to be doing any scalp trades. I'm still expecting higher prices. However, I do think we can see some chop here and take out some positions before we resume to the upside, okay? So that's what I'm currently looking at and expecting. Now let's get into the exact levels and why they are of significance. So the first level I'm looking at is the daily. This will be very important to close. It's been a support resistance level. So you had resistance, support, level. So once you flip this, that really raises your chance of getting to the weekly, which is another 1.8% move higher, to the 119,000 region, close to the $120,000 region, which is a psychological level. Now, quick little thing to talk about. This is a bigger resistance up here, and the reason it's significant is because we have a local high here, which is the liquidity region, so that's number one. Number two, we have a value area range of this entire value area high of this entire range you can see here. Number three, that's not number three, FVG, so your fair value gaps. We have a fair value gap with a level that hasn't been claimed yet, which is the discount region, which is supply region, sorry, which is 119,600. Yeah. So within that region, from where we are now in price, it's about a 3% move. And if we go down lower, it could be a 4% move. So what I'm looking at is to potentially be compounding my longs as we go higher, and looking at that in terms of a local support levels to be compounding into those long positions. So if what I'm trying to say here is the resistance level is coming in at about 120, 119K, put your alerts there. Potential short trade opportunity for that. However, I would say the bias in terms of swing trading would be swing long right now opposed to anything else. So that's what I'm currently seeing in the price action to the resistance side. And we'll take it step by step. But once we clear that, your expectation would certainly be that high here. And what you'd be wanting to see is, instead of a failed auction and resumption back down, you want to see a claim up and a resumption to the upside, okay? So that's what you want to be seeing. Now, obviously, we can only take it level by level and importance in terms of like what's happening. So certainly we'd be expecting higher prices, chop around here for a bit, higher prices expected. And then, yeah, I would say that resistance is going to be found here. Might have a decent drop. Who knows? Can only speculate so far. All I'm here to do is highlight points of resistance and give you what I'm currently doing in my positioning for the market. This is not financial advice though, so don't follow exactly what I'm saying or even follow what I'm saying. Yeah, so that's what I'm currently seeing in the market right now. Now, in terms of what is happening with the order flow, let's take a look at that now. So order flow is basically telling you the insides of the price. It's telling you what is happening, where volume has been exchanged on a more intricate and intimate level than otherwise. So what we can see at certain regions in the price action, you can see traders doing, well, a lot of things actually in the volume they're putting into the market. So you can see here your sell side and your buy side. Sell and buy. So you can see there was a very large short order up here, short order up here, short order up here. You can see what is happening in the moment too, based on the open interest and CVD line. So your CVD is your market long and market shorts, and it's telling you it's telling you if there is absorption in the market. So it's giving you all the factors of market and limit orders. Sorry, that's what it's telling you, market and limit orders. And from that, you can extrapolate if there's a divergence in price. That divergence can then be deciphered to see if there's whales buying up supply, keeping price at a certain region. Because if it was a one-to-one price and CVD line, there would not be a divergence. So the divergence lets you know that something is taking place. And that's very important to accompany that with the open interest, which is telling you, are there new positions entering the market or are positions closing? Now, that's really useful because with CVD, if you have CVD going up and open interest going up, that means new longs are being opened, okay? Now, if you have open interest going down and CVD going up, that could be a, so you're having, sometimes it can get a bit confusing. So basically, you'd be having a short squeeze. Yeah, so shorts would be having to buy back. You'd be getting liquidated. So that's how you can tell what's happening with price action. So what I'm seeing here currently is nothing at all, because the reason there's nothing at all is because you've got CVD going up in tangent with open interest and price. So it's very much correlated. There are different points in price action where you have divergences, and those are optimal opportunities to be taking moves in the market. An example of that could potentially be this. So one would say that this low over here was rather in line with this low here in terms of open interest. So rather neutral. However, there was more shorts entering the market. So what we can say from that is there were more shorts entering the market. However, price made a higher high. Now what that will entail potentially, and it's all potentially because we're using this as a confluence addition to our overall analysis when we reach points of interest. What it's telling us is that once price does that, it means there's being support there from the limit order side. Now you have to ask yourself, why is that the case? Is there whales holding price up? Just bigger accounts wanting to get their fills in without affecting the market much. So that's typically what happens around points of interest. You can definitely see that with this metric. So yeah, I just want to highlight what's happening now. Really nothing much, which is not really telling us to what's going to happen next. However, like I said, I'm really expecting chop for the next few days. Maybe take out some lows, take out some highs here. However, my base case still does remain higher, and I have to stick by that. And I'm truly believing and feeling $119,000 to $120,000 as our major resistance level to pop up, and that we can have a look at when it gets there. So when it gets there, that's a region to be taking profits on your swing longs. That's also a region to be looking for potentially a scalp short if you're into scalp trading. So that's the current plan right now. And if there's any questions about how I do my analysis, how I conduct my trade setups, feel free to make a comment down below. Either way, I'm going to be updating everything decently in real time, and then going from there with how I'm taking on the market and what I'm doing. If you want to see more in-depth videos, feel free to watch Beyond the Block. It's a podcast that I do with my team at Ainsley. We go over the monthly price action for Bitcoin and just key points in the price action and what we're looking for on the more macro landscape in terms of global liquidity, all that sort of stuff that is not really related to technical analysis. I'm keeping this rather more technical. Now, if you want to trade, guys, you can feel free to trade using my links. I have MEXC, Bitunix, MEX. I think it's Weeks. That's what it's called. Yeah, so those are exchanges I use personally. And if you want to support the channel, you can use them trade. For some of the volume fees end up with me, and I can make better content for you guys. So yeah, that's what's happening right now. That's what I'm currently positioning in the market and doing. Other than that, rather much keeping still, hands tight, not touching anything other than what I have now, which is just a swing long position. I'll be drastically changing that if we reach 119, find major resistance, or we start to lose 113K, considering I'm around, I got in around $111,000. So that's what I'm currently seeing the market on Bitcoin. I think it's going to be a slow weekend, so not too much happening. Anyway, guys, I hope you enjoyed this one, and I'll see you guys in the next either quick update, deep dive, or educational video that I make on this channel. So peace out. The date is the 20th of the 9th, 2025, and I'm just really documenting what I'm seeing in the market day to day. So it's all documented, and you guys can see how I'm doing my analysis and yeah, the frameworks that I use to make my calculated trades and actually take profit in this market, because most people don't make profit and they like to overcomplicate things. And it's really doesn't need to be that complex if you're looking at a few key things and you know what your framework is. So you just got to be patient. You just got to be careful and not get emotional about your trading. Okay. Anyway, guys, I'll catch you later. I'm very tired. It's time to go to bed, and I'll see you later.